I learned a lot there, but I did realize that the scanners were the same exact thing that I could get on TradingView. The main difference is that instead of having all of your indicators already there for you, you just have to learn which indicators you like and essentially set them up yourself. Now, with the free version of TradingView, they do give you the option to use, I think, up to 3 indicators at a time. But if you want to use more indicators, you just will have to upgrade. But I have designed this course in a way where I have the best 3 indicators that I think that I use, right? Because when it comes to indicators, indicators fall into different categories. You have indicators that tell you about the trend, right? Because it's the 3 things that you need to really know about the market is the trend, right? The volume and the momentum. Those are the top 3 things that you need to understand if you should be getting into a trade or not, right? Am I trading with the trend? Right? What is the volume of traders in this market, right? Is this market actually going to move, or is it going to be at a standstill? Is it going to be consolidating, right? And what is the momentum? Like, how likely is the market to continue to move in this direction? So the indicators that I found that give me all of the information without overcrowding my chart, and it still allows people to take advantage of TradingView for free, would be the EMA, right? We're going to use 2 EMAs. And then we're actually going to use the indicator called momentum. It's literally just straight up called momentum. So if you go to your indicators tab, right, you just click on it and then you search EMA, right? It's going to come up. It's not going to say EMA. It's going to say moving average exponential, because that's what EMA stands for, exponential moving average. And you're just going to click on it, right? And then it'll pop up on your chart and it'll look like that, or maybe a different color. Now, the settings I like to use, which I found has given me a really great snapshot of data, I like to use the 50 EMA, and I like to use the 20 or the 200, right? Because I'm practicing trading on a smaller time frame, I'm using the 20. But for the 50 EMA, once you add it to your chart, you first want to click on it. Click on the settings. And these are what your inputs are going to be. Your length is going to be 50. Your source is going to stay the same. And I'm just talking a little bit slow if you're taking notes. The offset is going to stay 0. And you want to change your method to EMA because it starts as SMA. And SMA stands for smooth moving average, right? But we want an exponential moving average. So the only things you have to change on your inputs page for your first EMA is going to be the length and the method, right? So once you guys have that, or you already have this on your chart, just drop some 7s in the chat so I can move on to the next screen. All right, perfect. All right, perfect. Okay, cool. So for the style of this EMA, we're just going to change it to blue, right? Or another color that's not already on your chart, just so that the colors aren't clashing. Change it to blue. And then you want to change the thickness. If you like a thin line, that's fine, but I just like to look at my things a little bit bigger so I can see. So I always put it on the second thickness and then just click OK. So then your EMA should appear like this on the chart. Now you're going to go ahead and you're going to do the same thing. You want to add a second EMA, right? But this time, you want to still go into your settings, but this time, the only thing you're changing is the length to 20. The method to EMA. The style to purple. And you want to change it to the second thickness. And then we want to click OK. So once you guys have both EMAs on your chart, just drop some 2s in the chat. And then we're going to go over the momentum indicator. All right, perfect. Thank you. All right, perfect. Thank you. All right. So the momentum indicator, again, is literally called momentum. So you just type in MOM and it'll pop up. And then you just click it, add to your chart. Now this indicator is going to appear at the bottom of your chart. And this is going to, of course, tell us the momentum, right? How likely is this market to continue to go in this direction, right? How fast is this going to happen? And then for your settings, I don't know why the settings not popping up, but for the settings, the only thing that you really want to do is, hold on, let me take it off and add it back. I need to change the settings. So for the settings, you can keep the line as blue or change it to whatever color you fancy. And change the thickness if you want the line a little bit thicker. And you can keep the length at 10 or you could change it to 5, right? That's just going to give you, the smaller the number, the tighter the data is analyzing. I don't know why this thing will not let me get into the settings. Hold on, y'all. But you should be able to change the settings. All right, there we go. I'm going to change my length to 5. I'm going to change my style to blue. Change the thickness to 2. And you need to do one extra thing on this one. You need to click this little squiggly line right here. For your momentum indicator, you need to make sure the price line is on. The price line is really important for certain indicators because it lets you know whether price is going to be overbought or oversold, and that's going to give you more insight into your trade. So I'll go into that in a little bit more detail once we get into the actual trade ideas. So you want your price line to be on. And as you can see, if I turn price line off, that dotted line disappears. If I turn price line on, that dotted line appears. Now that line essentially is the deciding factor for if you're going to take your trades or not. So again, we are going to be talking about market structure and stuff, but I'm going to briefly give you guys a refresher on this strategy and how to know if you should take your trades for the buy or sell or not. So the difference between traditional Forex and binary options is that binary options is a little bit quicker. You have a time limit, how long you're going to be into the trade, which is anywhere between 1 minute and 4 hours. And you know exactly how much you're making and exactly how much you're losing once you put that into the trade. Now with Forex, you do have to calculate your own profit in TP, but you are going to be in those trades for a little bit longer, right? Because binary options trading or HFX trading is by time. It's a time-based trading, and traditional Forex is by distance. Now we know with high frequency trading, you only need to be 1 pip, right, above or below your entry in order for you to clear that trade. But with Forex, it's going to be a little bit different. So for example, if we were going to look at this series of candles here, we're going to start here at this red candle. We will be looking at the distance from here to here, right? We wouldn't just want 1 pip because that's not going to help us. So in this example right here, from here to here, if we look right here, we can see that is 72 pips, right? That's 72 pips. And based on your lot size, that's going to determine how much profit you can make or how much money you will lose in that trade. And I'm just going to do a refresher on pips because depending on the asset that you're trading, how you're calculating your profit is going to change as well, right? So with Forex, let's just say the price where you're looking at Euro USD and the price is 1.246637, right? Let's just say this is our price. Now, when you're trading Forex, you're always going to want to, let me get my little pencil. You're always going to want to ignore the last digit, right? This is called the pipette. Now with HFX, we know we're focused on the last 3 digits, but not in this case. In this case, we're ignoring the last digit. Even though it's there, it does not count when we are calculating our profits, right? So let's just say that's the price, 1.24637. Now, if we thought this market was going to go up, let's just say we wanted to get in this market for a buy plus 10 pips, right? Our TP would be 1.2473, and then the last digit can be whatever you want because it doesn't count, right? And let me just cross it out, right? So from here to here, when you're doing Forex trades, you only want to calculate these two digits, right? So from 6.3 to 7.3 is going to be plus 10 pips. Now, if we were going down, right, and we wanted to do minus 10 pips, right, it would be 1.24537, and that would be minus 10 pips, right? And the same thing if it was plus 25 pips. And this is really important, y'all. Like, I'm not just saying this. It's like you have to understand the asset that you're trading and how calculating the pips matter. So plus 25 will be 88, right? Minus 25. Minus 25 will be, what is 53 minus 25? Our minus 20 will be 33. Somebody tell me what 53 minus 25 is. Let me just get my calculator. That's why we're trying to choose solid numbers, y'all, because I don't, when I got to do it off the top, so we're going to do 53 minus 25. Okay, it's 28. So it'll be 1.28. Thank you. I'm like, yeah, come on, teacher. Come on, let me know. So pretty much, we're only focusing on those middle two digits. So that's really important. Now, when it comes to the lot size, again, just to do a lot size review, because yeah, me too, girl. I went to school for English, not math. So when we're trading currencies, it's different than if you're trading Bitcoin or if you're trading US 30 or if you're trading NAS 100. That, like, you have to really, 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 really understand that. So 0.01 is going to be 10 cents, right, per pip. So in this trade, if we were risking 0.01, which is the smallest lot size, and that's 10 cents per pip, in this trade, we could have made plus $2.50, right? Because we only using 10 cents per pip minus your swap and commission fee, right? And same thing, if the market goes against you and you did your stop loss at 25 pips, then you will be losing $2.50. Now, if you're using 0.03, that's going to be 30 cents per pip. And I usually do a few examples in each thing just so you can see, okay, you don't have to use 0.01. You can use 0.03, right? And in that case, you would do 25 pips times 30 cents. And that'll be $7.50. So in the same trade, so in the same trade, right, that somebody risked 10 cents, then they made $2.50. Somebody else could be risking a little bit more, and they could be making $7.50 in that same trade. Now, the next class is 0.10, right? And that's actually $1 per pip. And this is for currencies only. This does not apply to Bitcoin. This does not apply to indices. $1 per pip. So again, if we're in the same trade and we risk $1 per pip, we would have made plus $25. And if we had our stop loss at 25 pips, that would be minus $25, right? So 0.40, that would be $4 per pip. So of course, $4 per pip times 25 pips would be plus $100. Now remember, this is the same trade. People are taking the same trade, but what they're risking is different. What they're risking is different. And this should help you, like, when you start making your trading plan and you figure out, okay, how much money do I need to make for the day, for the week? You'll be able to appropriately adjust your lot size or determine if you want to get into a twin trade or determine if you want to, like, you'll just have a better understanding because you're not just clicking a button. You're not just guessing. And then, of course, we got the big dogs, the standards. That's $10 per pip, right? So you see a lot of people may be posting online. They posting these astronomical things, and they may have a lot size of like 11. Some people may really have the capital for that, which is great. I would love to get there one day. I'm not there yet. So we're risking $10 per pip, and the market goes up 25 pips, right? How much money have we made in this trade? Somebody let me know. Let me make sure y'all awake. If we're risking $10 per pip on a 25 pip trade, the same trade that we've been in with 10 cents, how much money are we making? Wait. Yeah, exactly. $250. That's correct. $250. And don't be afraid to have the wrong answer, y'all. Like that's why we're in class. And I need to understand what you understand and what you don't understand so that I can know how deep I need to go into the thing. Um, I need to know how deep I need to go into the thing. So yeah, that's exactly right. So the purpose of me explaining this to y'all is so that yeah, if you don't know for sure, it's okay to put the wrong answer. Like we're all here and we're all learning, and that's why you have personal mentorship so we can correct those things. But 250 is correct. But as we can see, this is the same trade, y'all. I never changed my entry point, right? All I did was change my lot size. So there's somebody in the world right now who's in the trade for only 10 cents and they have a 25 pip TP, right? Which means take profit, and they're going to make $2.50 and they're so happy about that. But then there's somebody else out there in the world who's getting into the same exact trade. They just have a little bit more money. And instead of risking 10 cents per pip, they're risking $10 per pip and they're making $250, right? So this is important to understand and why I am still trading to this day after 2 years. This is why I encourage people to continue their trading journey, because a lot of people get discouraged because you may start off using a small lot size. You may only, I've taken accounts that were $4 and I've taken them to above $300, literally having $4 in my account and taking that account to $300, right? I've had $8 in my account and I've taken that account to over $300 because I'm not getting discouraged. Yes, it's patience and it's learning the skill, right? I'm not getting discouraged by the fact that it's a little money. Now, if you're using like a 10-cent lot size and you're trying to make $100 a day, you would have to catch 1,000 pips, right? Sometimes the market doesn't even move 1,000 pips in a month. So it's like essentially you shouldn't be focused on catching these really big moves. You should be focused on increasing your capital, right? So once you have this skill and you are able to take a trading challenge, you are able to get funded, you'll realize that 15 pips could really change your life. Right now, let's look at another lot size example. Then we'll get into the strategy. Then we'll get into some trade ideas, right? So let's just say somebody has a lot of capital in their account and they can use $50 per pip, right? Because 5.0 would be $50 per pip. That's a lot per pip. Now, if your goal is $100 for the week, you only need 2 pips. But if you have a account size where your capital is $50 per pip, and let's say you also want 25 pips, the same exact trade. Let's just say everybody's in this class right now. One person has $100 account, one person has $1,000 account, one person has a $50,000 account. Now, if you're using $50 per pip and it's 25 pips, the same person, somebody only made $2.50, somebody else made $1,250 in the same exact trade, right? So it's not about getting a lot of pips. I know a lot of people do lose patience with Forex because they're like, I can't make no money. It's going to take too long. It's like, focus on the skill. Once you have the skill, you can apply this in so many different ways, right? You have so many different prop firms that you can trade with. FTMO, they have accounts, a $10,000 account that they'll give you if you can prove that you can trade, right? They have a $25,000 account, a $50,000 account, a $100,000 account, a $200,000 account. Now imagine your life changing, right? Let's just say you decided to invest $160 to take the whatever challenge. I'm just using that number as an example. You want to invest $160 to take a trading challenge, right? And let's just say they tell you what your rules are. You have to make $1,000. You can't lose more than $1,000. You have to not lose this much amount of money a day, right? And then imagine you are able to follow those little rules, and then they give you an account with $100,000. Now you can, the same thing that you were doing in your small account, you can transfer that same mindset and that same skill into a bigger account. Because remember, all these different profits, let's just say these are 7 different students, all these different profits are the same trade. So the same student, because I was this person before. I was the person that was making $2.50, but because I believe so much in this skill, I knew that one day I would be the person that was making $7.50. Right. I knew I was so excited when I finally had the courage and confidence to move my lot size from 1 cent. Like I was like, ooh, I think I'm doing something. But it's like it's better than what I was doing before. And I just kept building my capital and kept building my capital. right? So you may be making $100 today, but you could be making, remember, this number could be 11, right? You could be using $1,000 per pip. Then you really only need, depending on what your budget is, 2 pips. It make $2,000. And that's where I want all of us to be, right? So if you guys are ready to really, because this again is just a basics overview. If you guys are ready to jump into the strategy and get excited and to really understand how simple it can be, right? Just drop some sevens in the chat and we're going to get started on today's lesson, right? About market structure. I know I feel like the lesson already started, but that was a really long intro, right? We're going to talk about market structure, breakup structure, because it's just, once you see it, you cannot unsee it. You can't unsee it, right? Once you see it, you can't unsee it. So cool. Let's go ahead and get started, y'all. And I'll just leave that there for now. I don't know if it's going to stay, but we just going to leave it right there. So, okay, good. I was just about to say, you good, Isaiah? You good? Don't pass out from excitement. But all right, we're going to get started. So I'm just going to let you guys know how I use this strategy, how we've been using the strategy in the class, how you can use it moving forward. Oh, my computer's dying. Hold on, y'all. How we can use it going forward and how we can start making money tonight, even with a demo account, right? I love my demo account. I will forever be a fan of the demo. So first and foremost, let's look at a sell example. When you're looking at a sell example, it's a few things you're going to want to look for, right? The first thing you're going to want to look for when you are looking for a sell is you're going to want to see, is there any liquidity, right? Liquidity has been a favorite word in this class. And just Raquel and Kayla, if you guys have found that understanding liquidity has helped you understand trade a little bit better, just drop some threes in the chat. If not, you don't have to drop anything. But I feel like that was a game changer for me. And that's why I stress it so much. Like, so the first thing you're going to want to look for a sell or for a buy is going to be liquidity, right? So you can notice liquidity by a collection of wicks, right? A collection of wicks. This means that price is resisting going any higher. Because when it comes to trading, the market is going to be going up and down, right? Like I gave in the first example with the folders. The market is always going to be going up and down, right? Now, when you find areas like this, where the market, you see that the market was consistently going up, but then you see that the market is kind of struggling to get past that place. You're going to notice some wicks, right? The wicks are saying this is an area of resistance. When it's at the top, you want to look for resistance, right? You want to see at least 3 candles, right? You want to see at least 3 candles rejecting off of an area. This is going to be for a sell or a buy, but we're doing a sell example right now. So we see those rejections, right? That's the first thing you want to look for. Do I see at least 3 wicks rejecting off that area? So we're using this example. And do we see that? Yes, we do. We see 3 rejections. That's going to be our first confirmation for a sell. We see that liquidity there. The second thing you're going to want to look for or ask yourself is, are my candles below both of my EMAs, right? Because what you're going to notice is that when the market is below the EMAs, because this is the trend indicator that we're using, and I'm just going to scroll a little bit so y'all can see, when the market is below the EMAs, what you're going to notice is that it's a selling trend. It's most likely going to continue to sell. Price is below average. It is going to continue to drop. And vice versa. When the market is above the EMAs, right? For example, here, this section, we notice that we have more opportunities to buy. So as we can see, this market has been going down for some time, hence is why we have all these sell examples. So we know that once the market comes down and crosses below the EMAs, that's letting us know that we should really be focused on sell opportunities, right? So 2 confirmations so far. First confirmation is liquidity, 3 rejections. Second confirmation for the sell, we see the candles are falling under both EMAs, right? Then the third thing you're really going to want to see with this simple strategy is you're going to want to see the momentum line crossing below the 0 line, right? This is letting you know that the sellers have control and the momentum is most likely going to continue to drop. So if it's facing down, that's an indication that it's going to turn around. But your best bet is to, or the best time to enter would be when it's actually crossing, right? That crossing point is a great entry point, or when it's below the blue dotted line, right? You're not going to want to take sells ever if the momentum is above 50, because it's literally telling you that price is going to continue to go up. And as we can see in this trade example, we had everything we were looking for. Like, let's just say we would have came into the market on this candle, right? We would have said, okay, we have one rejection, we have two rejections. And if none of this had happened yet, once we see this third rejection, we would have, okay, our ears would have perked up and we said, okay, we should be really looking at this sell opportunity. So we see that. We see the candle crossing below, letting us know that, okay, prices continuing to drop. It's below average. And then on the candle that we would have entered in, what happened, right? And you can't make this up. This is why I love back testing, right? Back testing means if I'm telling you something right now, you don't have to take my word for it. You should be able to go back into the market at any point in time. And if you notice a selling trend, or if you notice a buying trend, is everything I'm saying applying to that area, right? Back testing is so important because you're not just listening to somebody talk. You're saying this actually works. So we have all the confirmations we have on this candle. And then what else we have? The momentum line crossing down, falling below 50. So after we get all those things, and this is past market action, look what happens, right? We could have gotten to this trade. And again, this is the same trade from before, right? That's about 72 pips, right? So even if you were only using, sorry, I think I'm getting a little cold. Even if we were only using a 10-cent lot size, that's still $7.20. And one thing I actually love about the foreign exchange market is that you can enter this trade as many times as you want. I'm not saying go crazy and risk your whole account. However, this is my philosophy, and you guys don't have to live by it or agree, but I feel like if you have the confidence to get into a trade one time, you should have the confidence to get into a trade at least 2 times. So even if you are risking only 10 cents, let's just say you entered this trade 3 times, that would have been $21, right? And that's not bad for a 30-cent risk overall, right? If you guys would like to make $21 off of a 30-cent risk, right, just drop some sevens in the chat, because it could really be that simple. And that's something I also had to build the confidence to do. I had to build the confidence to enter the trade multiple times, because I'm the type of person, like, I've lost a lot of money in this market. Like, it's actually ridiculous. Like, when I actually sat down and I looked at all my deposits I've ever made on pocket option, all my deposits I've ever made on MT4, I was like, ugh. But then once I started to get results, it's like, you get literally one good week or month of results, I promise you that will take out all of the losses you have ever encountered within this market. And that's another reason why I encourage you guys to keep trading, is because you could have one good trading week, right? One good trading day that will literally take out everything you lost. And I don't know about y'all, but my intentions with this is I want to be a millionaire, right? I want to get funded at least $1 million from prop firms. Yes, I would love to have $1 million in funding. And it's like, I haven't lost $1 million yet. So my whole thing is like, how you want to be a millionaire, but you don't want to lose no money? I haven't lost $1 million yet. So I feel like I'm okay. Like, I want to make $1 million, so I have to be willing to lose that much. So that's all I'm saying, is I lost mad bread. But once those wins start coming in, it was like amazing, right? It was really amazing. And it really just washed out all the years of losses. And just think about one month changing years of losses. Like, that's what I want y'all to focus on. So now we're going to look at a buy example, right? So a buy example, and we're going to focus on this section right here, right? A buy example, of course, is going to be the opposite. The first thing you're going to want to notice at the bottom is that liquidity, right? Do I see any rejections on the downside? So in this case, we see it's a lot. We see 1, we see 2, we see 3, we see 4. And again, the more you guys back test, the more you watch my videos, the more you watch other people's videos who highlight back testing, you're going to notice this happens all the time. It's going to be 3 or 4 rejections on a lucky. When you get lucky, sometimes it's only 1, but don't rush it. If you don't have everything you need, just don't get into the trade. The market's open 24/5. Just wait for another opportunity. So in this case, at the bottom, we have 4 rejections. Because when you're selling, the market is going from the top to the bottom, right? But when you're buying, the market is going from the bottom to the top. So in this case, you're going to want to see the rejections on the downside. You're going to see the liquidity there. The second thing you're going to want to see if you are looking for a buy using this strategy, you're going to want to see that both candles have crossed above. I mean, the candle has crossed above both EMAs. So we can even be looking at this candle or this candle. So we have one confirmation, two confirmation. And the third confirmation, what do we see at the bottom? We see that the momentum line has crossed above the dotted line and is actually going up. It's a lot of momentum. If it's facing up strong, it's literally telling you, I'm going to continue to go up. Like, I'm literally going to continue to go up. And then in this trade, right, we could have potentially made, if we would have gotten here, saw all our confirmations, right, that's 55 pips, right? That's not bad at all, right? If you're only using 10 cents, that's still $5.50. But if you're getting into the trade 5 times, that's $25 off of a very small risk, right? And if you're using a $2 lot size, right, that's what, $110. And if you're getting twice, that's $220 just by being able to look at some rectangles and lines and colors and say, okay, I know what's happening here, right? So again, I'm going to just show you guys a few more examples just to let you know it's like you can wait. Like, you don't have to rush to trade because this is going to happen again. Like, it's going to happen again. So let's look at a sell example. What do we see right here? We see 3 rejections, right? We see 1, 2, 3 rejections. What do we see? We see the candle crossing below both of the EMAs. What do we see at the bottom? We see our momentum line crossing below the dotted line or below the dotted line. And then let's see how many pips we could have potentially caught in this trade. Okay, 55 pips. That's not bad at all. It's not bad at all in 6 hours. Now, I showed you guys this on an hour time frame because I wanted you to, I'm just giving you examples. But the beauty in this and why I love this strategy is the beauty in this is that you can find similar trade ideas on the 5-minute time frame. And this is important to note, and I'm gonna show you guys why. Because watch how many pips we can catch. Because before, if you were looking at the hours, because when you use the ruler tool and you go down, it tells you how many pips and how many hours, right? So that's 54 pips in 3 hours and 30 minutes. Cool. But the other time, it was 55 pips in 6 hours. That's so dope what you're saying with the candle wicks. Yeah. Oh, yeah. Yeah. Watch my video on liquidity that I just posted on YouTube, I think last Monday. Like, that is a game changer. And when you get into using the liquidity to set up your stop loss and take profit, it just gets even better. Like, that has been the most game-changing thing for me. Like, I used to go into my trades with so much anxiety, and it was just ridiculous because I'm like, I don't know, is it going to go up? Is it going to go down? Blah, blah, blah. But it's like, now I'm just like, I trust my strategy. I know that it's going to win 70% of the time, and it may lose 30% of the time. And that's the thing about once you find a trading strategy that works, it should really always be between 60 win rate and 40 lose, and 70 win rate and 30 lose. But either way, the crazy thing is that it's not linear. Like, you just know that you're going to take some trades, some going to lose, some going to not. But overall, you're going to find those winners, right? So here's another buy example, right? We got and this is on a smaller time frame. And it's just, you don't have to, again, you can practice. I feel like the 15-minute is a good medium. Right now, I'm just practicing on the 5 in general. Like, that's how I'm personally trading because I'm a scalper by nature. But I did start on the hour just to really build my confidence with that. So let's just say, for example, we see this liquidity down here, right? We see 1, 2, 3 rejections. This is never going to fail, right? It could be a little small rejection like that, but the longer the wick, the better chance that it's going to reject off the area. We see the rejections. That's the first thing we see. The second thing we see is the candle weight, right? Because you have your confirmations, but then you also have your, and I say this all the time because it's important, you have your confirmations for the trade, but then you also have your entry signals and your exit signals. So we have our confirmations, liquidity, candle crossing above it, but our entry signal will be the candle has officially crossed above both the EMAs. And then we come down to the bottom. Sorry, y'all, I gotta move this out the way. All right, there we go. And then we come down to the bottom and perfect. We see the cross up, and then we see we could have caught all those pips. And this is on a 5 minute. So let's see how long it would have taken us to. That's a lot of momentum in a short amount of time. Okay, so that's about 16 pips in 45 minutes. Now, if you're using, again, the smallest lot size, that's $1.60. That's not bad. But let's just say you're using $1 lot size and you get into this trade twice, right? You just made $32 in 45 minutes. Some people don't even make $32 an hour. So just by understanding this, it really will help you, right? So that's how you use the strategy. Now we're going to apply this, right? And I'm actually going to do something quickly, right? I'm going to hide all of my indicators. I'm going to do one more example, and then I'm going to put the indicators back just so. Another thing I want you guys to have the confidence to do, I'm not saying turn off your indicators, because the indicators are only there to confirm what you're seeing. But the indicators, literally, you can trade strictly off of price action. So I'm going to look at, let me just scroll to a random place in the chart, right? So I'm going to look at this area right here. I don't think this stuff be looking the same for real. I'm going to look at this area right here, right? Now, I'm not going to have any indicators on, but I am going to circle some things. And once I put my indicators back, it's like once you see it, you can't unsee it. So I'm not going to use that tool. I'm going to come over here, right? And this is how I personally mark up my charts. You're going to take you can come over here. All these tools are free. You can click the rectangle. Now, what do I see, right? If none of this, hold on, let me actually do that, right? So let's just say that none of that stuff had happened yet, right? Because this is what will happen, and this is where I find a lot of people get confused. It's like, you know what you're looking for, but it only makes sense after it has happened, right? If that has ever been you, just drop some 7s in the chat. Like, it's making sense now that I'm explaining it to you, but if you were to go into the charts, you would still be confused because you don't know what's going to happen next, right? Yeah, but cool, just stay with me. Stay with me. So let's just say the first thing we notice is we see that there is some liquidity here, right? That's the first thing we notice. So we're going to say, okay, we know that the market has been going up and down, but it's rejected in this area multiple times. We know that, okay, the market may be up here now, is no longer in the liquid area, but we know once it comes back down into this area, it's going to go back up for a buy. That's what you should assume when you're looking at liquidity, whether it's at the top or the bottom. Once you have your little box there, right, your rectangle where you're highlighting those wicks, just know once the market comes back down into that area, it's going to go up the other way. So we're going to play out. We're going to see what happens. Well, I should have started probably from this red candle instead of the green candle, because once the green candle came back in, that's when it decided to go. But anyway, we can see that the market, it touched back down. Now, I'm pretty sure, and this is without the indicators. Let me turn this off. Oh, dang, I lost my place, y'all. I'm going to go back to it. Okay, there we go. So I'm pretty sure if I were to circle, I see the liquidity. I see that I'm gonna say between this candle and this candle, right? I'm pretty sure between these two candles, once I turn my indicators back on, one of the two of these candles should be above both of the EMAs, and it should also be above the MOM line, right? And I'm also going to circle this right here. We see the liquidity here, and I'm going to assume one or two of these candles, right, is going to be below the EMAs, and it should be, the MOM should be below 50. So let's turn it on. Okay, so it's a little bit low. It was crossing up. It was crossing up, but you can see where I'm going with this. And let's turn on the momentum, right? And then we do have the momentum facing up. And then here, well, that's the sell example is great. We have that liquidity there. Then we have the market going down there. So cool. We understand that. If you guys understand how to use the strategy, drop some 7s in the chat, because I'm also, again, I really want to talk about market structure and how understanding this, what we just said, plus the break of structure will also help you to determine which way the market is going to go when it's happening in real time. So let's actually look at the market in real time. The market just opened. So it's going to be moving a little slow right now. So we really don't want to do anything too crazy, but we could kind of get an idea of what's going to happen. So again, like I said, when the candles are falling below the EMAs, focus on sell. When it's falling above the EMAs, focus on buys. However, the exception to the rule is that if you are seeing that it is some liquid at the top, even though it's above the EMAs, it does have the potential that it could be selling. So that's something to focus on. Before we get into that, let me actually show you guys the break of structure example. Ooh. Let me show you the break of structure example, because that's going to give you more confidence to get in as well. This market has been ranging crazy. Okay, so we're just going to use this area for example. So another way to confirm that you really want to get into your trade is to, aside from it being above the EMAs, aside from it being above the MOM, you want to look for a break of structure. And this is really the highlight of today's class and the takeaway I want you guys to take away, right? So let's just say the market is ranging. We could see it was ranging in this area, right? Now, what we see is a break of structure on the upside. That means that the market was ranging in this area, but then it decided that it wanted to go up and buy. Whichever side that the market breaks structure on, 8 times out of 10, that's the direction that the market is going to go. So again, in this example, we see the range. We see the candle breaking structure, meaning it's no longer ranging. Then we can see that the market went up, right? Let's look at another small example, right? We see the market was ranging, right? We see a break of structure on the downside, and then we see that the market sold, right? Now, I'm not going to talk too much. I'm just going to keep highlighting these examples. And when you see it, and if it clicks and it makes sense, just drop an MS in the chat, right? I'm just going to keep highlighting these break of structure examples, right? We see consolidation, right? We see a break of structure on the downside. The market sells, right? We see the market ranging, right? Oh, wait, no, I need to get a smaller example for that buy. But we see that it broke structure on the downside, and then we see that it continued. Then we see that it continued to sell. We see. Okay, here's another one. We see the market was ranging, right? We see it broke structure on the upside, right? Which meaning that when I say it breaks structure, that means it was in a certain range. It was selling here. We had liquidity there. We had liquidity there. And it was staying in that zone for a certain amount of time. It wasn't on a strong uptrend. It wasn't on a strong downtrend. It broke structure on the upside, right? Once it broke structure on the upside, what happened? We have the rest of our confirmations falling into place. So that break of structure can be another entry signal for if you want to take your trade or not. Here's another really big example. We see the market was ranging, right? And this was I don't know how many minutes this is, probably like an hour. So sometimes you can get into a trade and it ain't going to hit automatically, but if this is at least 12 candles, that's an hour, right? It kept coming to this resistance, coming to this support, coming to this resistance, coming to this support. And then what happened? This candle broke structure on the downside. It is no longer ranging. In addition to the break of structure on the downside, we also see the candles below the EMAs, and we see this crossing down, right? So it's like, this is something that once you see, you can't unsee, right? So if we put everything that we're learning together, it's going to make a lot of sense. So let's look at this area, because I don't want y'all to be confused at all. We see the market was ranging. That's the first thing we notice. The second thing we may notice is there's liquidity, right? We setting this up for a buy. We see the market was ranging. We see that there's hella liquidity at the bottom. Like, once you see that liquidity, it's kind of like you already know it's going to turn around. Unless there's a break of structure on the downside, you should be looking for a buy once the market gets back into that zone. That's like hands down. So we see it ranging. We see the liquidity. We see the candle finally crossing above both EMAs. Let me erase some of this stuff. We see this liquidity, right? We see the range. We see the break of structure on the upside. And then I'm pretty sure The MOM is above 50. And then again, even if you don't catch, and this is the thing too, people feel like you feel like you're missing moves or you're missing out on money. You don't have to get in the market from here to there, right? That's only 12 pips, right? That's what you missed. However, even if you do get into the market up here, right? After you have all of your confirmations, that's still 20 pips in 2 hours, right? So if you're using $1 and you're getting into that trade 3 times, you still can make $60 in 2 hours just by simply understanding the trend, understanding the strategy, and waiting for that break of structure. So is that making sense, y'all? Just drop some threes in the chat because I'm getting confused by the sevens. Okay, cool. Awesome, awesome, awesome. Now, this may seem a little bit repetitive, but it's like the more you hear it, the more it's going to make sense. The more it's going to build your confidence because I myself have been on so many different educators' videos. I've seen so many different YouTube videos. I've done so many different things, but once something clicks for you, it's like it won't unclick. All you can do is have the patience to practice that thing. So let's see what's going on here. Over here, we about to see a potential trade idea for today. Looking at Euro USD. So I hope you guys do have MetaTrader 4. I mean, if you don't have MetaTrader 4 and you need some help with Owanda, just let me know and I'll do that. So before I get into, let me turn these indicators off for a second, just 1 second. So before I get into my explanation, right, if you guys were to come into this market right now, right, come into the Euro USD market right now on your own, just drop some things in the chat that you notice, right? What is happening right now with price that's going to kind of frame how or if you're going to take this trade? Because it's not always opportunity. It's just not. Let me know if you notice anything. Ranging, okay. Okay, so if it's ranging and you notice that it's ranging, what are you waiting for before you take your trade? Break of structure. Exactly. Exactly. So you know that if this market, oh, let me change my precision. Sorry, y'all, 1 second. I'm like, where's my price? So yeah, pretty much breakthrough. Exactly. So we know that, although I don't want y'all to be confused, right? We know that if we're looking at this market right now, we wouldn't know, like, should we buy, should we sell? I don't know. The first thing, like Kayla said, we noticed that it's ranging. We know that the market just opened, right? So I typically don't really trade on Sundays. Like if I am going to trade on Sundays, I wait until like midnight because the market just opened. Anything can happen. But we notice it's ranging. Now, we notice that it's ranging. So pretty much, in order for us to confirm that we want to take that buy, it's going to have to be a break of structure. If you do not see that break of structure, it's pretty simple. Just don't take the trade. Now, you may be looking at this as well, because this is another, anything else that you guys are noticing, right? Other than the ranging? Yes, liquidity at the top. So liquidity at the top is telling us that this is a potential sell, right? It's a potential. It could buy or it could sell, but now we're going to add I'm gonna just add my little box right there because that's what I would do realistically. And we doing a real live analysis. So I will highlight my liquid area, right? And I'm gonna turn it red because I know that once the market gets into that zone, it has the potential to sell. Now I'm gonna add my indicators back, right? I'm gonna see, is it above the EMAs? I'm gonna see, is it above the EMAs or is it below the EMAs? So right now I see that it's above the EMAs, and I see that my momentum, and this is another thing too. If you ever, if any indicator is just so close and it's like you really can't see, just double click it and it'll open it up for you so you can see. It looked like it's about to cross above that line. So I wouldn't get into anything right now, but because I see that I have all of my things setting up for a buy, I am going to be looking for that break of structure as my entry signal for if I should take this trade or not, right? Now, if my momentum decides that it wants to cross down, then I know that I could get in for a sell. So what I would do for this trade, is I would check it on a higher time frame, because it just really depends on where you're trying to take your trading. Like, it just depends on where you're trying to take your trading. But me, I'm practicing on a 5-minute now, but I always make sure it has confluence with. Confluence just mean that it's the same thing happening on higher time frames that's happening on lower time frames. So let me delete this box. So I'm gonna check on my 1 hour time frame. And on my 1 hour, I have a little bit more information. Now, how are my 1 hour and my 5-minute conflicting? Somebody let me know. And then let me know if looking at it on 2 different time frames gives you more insight into what you should actually be doing, right? We saw that it could potentially buy, but now what are we seeing on the hour time frame? Yep, it's below the EMAs, right? So that gives us a little more insight. So, okay, now we see that it could potentially sell, right? We have more confirmations for sell than a buy at this time. We see that if we zoom in here, we see that this is technically still below zero. And we see that on the hour, this is below both the EMAs. So now let's check the next time frame, the 15-minute. So in the 15-minute, we're getting the same vibes. We have liquidity, right? We also have the candle falling below the first EMA, so it does have the potential to drop. So now this is put into perspective as you can look at it on the 5-minute, but the 5-minute is like, okay, now you have more insight on the 15 and the hour that's giving you more confirmations for a buy. So me personally, I would feel more confident with the buy. I mean, I would feel more confident with the sell than with the buy, just because I had that confluence on the higher time frames. And the higher time frames gives you more information because you're looking at it over a larger period of time. So this could be a potential sell, right? This could be a potential sell. So you guys can sell at market execution. And look, there you go. You can sell at market execution, or you can set a pending order, which I will drop in the trade. I mean, drop in the chat right now. So a potential sell limits idea, right? You have to select sell limit as your order would be. I want to go to the last highest high. I'm gonna just do a quick review on where to set your TPs and SLs and how I find mine. And then we're gonna wrap up today's lesson. So a potential sell limit will be once the market gets back to 1.05597, right? That is what you would want to put as your sell limit. Now, when you're setting your stop losses and TPs, if you're going for a sell, you're always going to want to put your stop loss at the previous highest high. So we can see that this is the previous. Oh, no, that's the entry. So this would be the previous highest high. So the previous highest high would be, we're going to say stop loss could be at 1.05764. Right now, again, the market just opened. It could decide to go up just based on liquidity, because when the market is moving based on liquidity, the whole purpose is it's going to go up just a little bit more than it previously was, and then it's going to come back down. So we have our sell limit, our stop loss, and then we're going to set our TP for the sell below the last lowest low, right? Because the market has to come through and it has to take out all of these traders right here who have their stop loss right here. So you could set your TP up here, or you can set it below the last lowest low, which is what I would typically do. So that would be 1.05357. So yeah, and you can see that the stop loss is about 20 pips and the TP is also about 20 to 25 pips, right? So that's one potential trade idea. And we could just watch that and see what happens. And if we go back and check it on the 5-minute, I'm pretty sure we'll see that it's dropping, right? We get like this is crazy, y'all. Once you see it, you can't unsee it. We see all that liquidity happening. we see this MOM is clearly facing down, evidently, right? So that's just one potential trade idea that we could take on this chart. And I feel like it's gonna go pretty well. We could look at GJ for a second. This is the other currency pair I like to trade, but this pair is crazy AF and dangerous. So I've been trading it for a while, so I get it, but you may just want to practice trading JPY pairs in your demo before you really go hard, because they will clean your account straight out. So the first thing I noticed in GJ, I see liquidity at the bottom. I see the market is actually already in my buy zone. So for me, I would just be like, go for it. But we're going to check the confluence on the 15. And we're going to check it on, I'm just going so fast. Sorry, y'all. We're going to look at it on the 15-minute. What do we see on the 15? Look at that. We see all this happening, right? We see all this liquidity, and we see our MOM about to cross up. So we might want to take it for a buy potentially, right? Potentially, right? And let's just check it on the hour. Yeah, it's giving confluence on every time frame. So yeah, you could potentially take GJ for a buy limit order. And again, this is a risky pair, but I will drop it in the trade for anybody who wants to put in a demo and see what happens. So we're going to set our entry around 162.842. And we're going to set our, this is for a buy. So we're going to set our stop loss at the previous low is low, or where we see previous liquidity. So let's just go down a little bit right there. And we're going to say our SL is, because these pairs act straight up crazy. It's in the chat. The first pair was EURUSD. So then the stop loss for this one is going to be you're welcome, 162.645. And then potential TP would be at the previous highest high. So TP would be 163.132. So yeah, I'm just gonna give you guys just a brief overview about why you should set your stop loss and take profits there. Because again, when it comes to liquidity, if you're trading based off of that strategy and that mindset, the whole purpose of this happening is for the market makers, not people like us, but like the banks and stuff. They really just want to take out everybody's who was in the trade, take out their stop loss. So let's just say if you were in this, they want to take out people who have their stop losses at a certain place. So let's just say if you were to look at this trade right here, you got into this trade for a sell, and then you would pretty much set your stop loss at the previous highest high. And as we can see, if we would have entered here, we would have not gotten taken out of this trade. And we would have wanted for a sell, you would want to set your TP at the previous lowest low, right? So let's just say we set it right here. As we can see in this trade idea, the market continued to drop past the last lowest low because it had to, right? It had to, right? It's always going to do the same thing. Now it's the same thing right here. Let me look for another good example. Look for another quick example of why you should set your TPs and stop losses at the lowest lows and highest highs. Okay, this is another good example. So let's just say we were right here in the market and we saw the liquidity happen at the top. We're going to set our, if this was for a sell, we would set our stop loss at the previous highest high, which we here. Again, we can see the market didn't get back up there. And then we see the previous lowest low is right here. And what happens? Did the market break past that lower low, or did it not break past that lower low? So you're always going to want to set your stop loss a little bit above the last highest high. And you're going to want to set your TP below the last. Yeah, exactly. It broke past, and it always will. It's never going to fail. Let's look here. We see we have liquidity. We see the market, it didn't go low. And now for the TP, we see the previous highest high was right here. And then what happened? The candle broke past just a little bit, right? And then it sold, right? But then it actually went back up. So anybody who had, and this is so crucial, y'all, anybody who had their stop loss right here, right? I mean, anybody who had their thing right here, they eventually would get taken out of trade because the market decided that it wanted to continue to go in the other direction. So I did give you guys 2 different trade ideas. I do encourage you to, I need to actually get into these trades for myself. Let me go back to the 5 minutes because I do have faith that this market is going to sell. And you have to learn that you can't wait around for the market to make a move, because something that Mark Douglas, this is the last thing I'm gonna say, something that Mark Douglas said, he's the person who wrote Trading in the Zone and The Disciplined Trader, is that you can't just want to ride the momentum and the coattails of what's happening in the market. You have to be convinced that what you're seeing is correct, because trading and the highs and lows are all based of everybody's individual perception of what's going to happen in the market. So if more people have faith that the market is going to sell, then the market is going to sell. But if you're just sitting there waiting around for it to sell, nothing's going to happen. You're going to end up getting stopped out. You're going to get taken out of the trade and you're going to lose money because you're not willing to move the market, right? As traders, we have to have confidence and we have to be willing to move the market. Like we can see based on this example that's happening right now, we see this liquidity. Now, I bet you I can almost guarantee what's going to happen is that if this market doesn't have a dramatic sell, something we got to talk about too, not now, but on another session, is market gaps. This entire gap has to be filled. It has to be filled. So if you was really about it, you know, you may get in for a sell. You may set your stop loss right here, but the market is going to break past that and then it's going to sell. So put your stop loss a little bit higher than this, because it's going to break past it and then it's going to come down because all of this space has to be filled. So if you're really about it, I would get into a trade and I would set, again, use your demo too. I would set a TP as low as this, right? I promise you the market, trust the trade. I promise you the market is going to come down there and clean it up. I can guarantee, because we have to stop out these people. We got to stop out these people. We got to stop out these people. And then there's going to be a new lower low. And then the market, exactly, because it's going to correct itself and go up. Like, it never fails. So hopefully you guys learned something today. If you do have any questions that you want to ask me, or you want me to go into something a little bit more detail, you guys can drop them in the chat, or you can unmute yourself and I will answer those questions. Thank you. That is my goal. Like, you know how they say, be the change that you want to see in the world? Like, I wish somebody would have just talked to me direct. I don't like when people use big terms and try to make it seem like they a guru. It's like, shut up. Just tell me what's going on and how I can make some money, right? So that's what I'm trying to be. Trying to be that girl, that teacher. Whew. So yeah, y'all, as we can see, this market is giving sell vibes. It's giving sell vibes. I'm happy I learned something new that I didn't know. Yeah, it's definitely gonna make it easy. It's definitely gonna make it easy. I would just say practice. Owanda has a demo account. MT4 has a demo account. So even if you aren't 100% confident to take it in your live account, take it in your demo and see what happens, right? And then you'll notice, like, let's just say you got into a sell right here, but then the market went back up. In your demo account, you would have all the confirmations that you need, but in your live account, you would take the entry on the retest, right? You may not get in on the 3rd wick. You may get in on the 5th wick, but at least you're for sure that it's going to sell and you're less likely to lose money. Now, again, you're not going to win 100% of your trades, but you can properly manage your risk and win a lot more trades and increase your win rate and have a positive equity curve if you really practice these principles. So that's all I got for you guys today. I'm just curious to see what's going to happen, but I already know. I know it's going to be a huge green candle that's going to shoot up. It's low-key probably going to shoot up to right here if you want to adjust your stop loss, because that's a spike, and then it's going to come down. So yeah, that's all, guys. If you have any questions throughout the week, feel free to reach out to me. Remember that the buddy system is still in place. If you have somebody that wants to do it, the point system is still in place. So if you want to share this session on Instagram and tag me, you will start to accumulate your points so that you can redeem them for points in the loyalty program. But that's it, y'all. Have a good night. I will email this to y'all whenever I get it, and I will see everybody on Tuesday. You're welcome, and good night.